This week, Apple unveiled a new set of luxurious headphones, and we got our hands on them, all $550 of them. Plus, Disney managed to sprinkle some of its signature magic onto its streaming business, and Wall Street analysts are falling over themselves in excitement. And finally, no suits, no dresses, no problem for Lululemon, which posted double-digit sales growth as millions opt for leggings over slacks as they work from home offices. I'm Mackenzie Sigalos, and this is CNBC After Hours. It's the worst week on Wall Street since back in October. All three major indices posting weekly losses as the 2020 trading year starts winding down. But just to put the disappointing performance in context, stocks had a really great November. The S&P 500 gained close to 11% last month, and while the week on the whole was a little bit of a bummer, that wasn't the case for every stock. Take Disney. Shares of the media giant hit an all-time high today after impressing at its 4-hour virtual Investor Day event yesterday. The company made a huge bet on streaming when it launched its streaming service Disney Plus last year, and the project has been so successful, they even surpassed their own expectations. Analysts from Wall Street banks and research firms loved the news. One note called Disney the winner over Netflix. Another referred to its content development plans as, quote, frightening for competitors. CNBC's Julia Borston can break down what's behind all the hype.
Disney Plus is growing so much faster than anyone could have possibly anticipated. Disney itself gave guidance that it would hit between 60 and 90 million subscribers by 2024. But now, 1 year later, 4 years ahead of schedule, Disney is nearing the very top end of that guidance. Because Disney Plus has been growing so much faster than anticipated, the company has increased its guidance for 2024, which is a full 5 years after the service launched. Disney says it'll have between 230 and 260 million subscribers to Disney Plus by 2024. What's so remarkable about Disney's numbers for its direct-to-consumer streaming services is that the growth happened so quickly. Netflix is a massive force. It has nearly 200 million subscribers right now, but it launched its streaming service back in 2007. So we're talking about 13 years later, it's now at nearly 200 million subscribers. Disney has had a couple of key advantages to allow it to grow so quickly with its direct-to-consumer streaming services. One is the fact that Disney Plus costs $7 a month. That's about half of what Netflix's most popular service costs. Now, Disney is increasing the price point by $1 here in the US to $8 a month, but still a pretty affordable price point. Then you have the fact that Disney is a marketing machine. It's able to take its brands that are popular elsewhere and use those brands and those popular familiar franchises to drive subscribers to Disney Plus. What's clear about these growth numbers now and the guidance for the next 4 years is that this is not a service just for families. You have shows like The Mandalorian, which are based on the very popular franchise of Star Wars, but that's really appealing to more of an adult audience. And Disney, thanks to its acquisition of Fox, is really able to give a little bit of something for everyone. It doesn't have the volume of a Netflix, but it definitely has content that's premium and enough of it that people want to subscribe and will stick around. Disney unveiled a massive quantity of content, both on Hulu, where they announced big exclusive deals like with the Kardashians, to ESPN Plus, getting more content. Then, of course, Disney Plus got the majority of the content announcements that Disney made last night. And in fact, Disney says it's going to have 100 new exclusive titles going to Disney Plus every year. Disney also made some news in talking about how it's going to take its films to consumers. Some films will have a traditional release. We could expect its Marvel films to be in theaters for a certain amount of time before they're available at home. But Disney said that it would be doing some simultaneous releases, like it has this animated film called Raya. It's going to be putting it in theaters in March and at the same time offering it to Disney Plus subscribers for an additional $30. It's different than what we've seen from the other major studios. Universal Pictures, that's CNBC's sister company, they announced that they're going to have a 17-day window between when films are available in theaters and then when is the earliest point that the studio can offer them for purchase at home. And then in contrast to both of those approaches, we've just had Warner Media announce that for its next 18 films, it'll be releasing them in theaters and also making them available for streaming to HBO Max subscribers.
Okay, let's get to our sound check. Here's a roundup of the day's biggest action and what the top newsmakers and business leaders had to say on CNBC's airwaves.
We have very limited data in 16 and 17-year-olds, and the question put before us was whether the benefits outweighed the risks in that population as well.
Since the Pfizer interim data came out showing that this vaccine is more than 90% effective on November 9th, 140,000 nursing home patients have been infected with COVID, and 21% of those individuals are going to die. So those are the stakes that we're dealing with right now.
You're going to see huge numbers of Americans having been vaccinated. That will improve health, that will improve the economy, that will provide a big psychological uplift after a very difficult year. But we got millions of people whose unemployment benefits start to expire the day after Christmas.
What we've learned in 2020 was the pandemic and its impact was not felt equally. We can't let that wealth divide continue to increase, and that's what we're going to see.
All right, Apple has 2 new products launching next week. One is Fitness Plus, a subscription service for digital workout classes, which will be able to integrate data and metrics from the Apple Watch onto the user's iPhone or iPad screen during the workout. And the other is a hardware offering, Apple's newest addition to its wildly popular AirPods line, the AirPods Max. These over-the-ear noise-canceling headphones are built with high-end materials like aluminum and steel, but be prepared to pay up. The AirPods Max cost about 57% more than similar options from competitors. Well, our tech product editor Todd Hazelton got his hands on these a few days early to see what all the fuss is about.
Apple announced the AirPods Max on Tuesday of this week, and I was able to test them starting on Thursday. And you can think of them as sort of the ultimate headphones that Apple sells. And remember, it owns the Beats brand too with a lot of headphones. But these are ultra premium noise canceling headphones that go over your ears instead of in your ears like AirPods and AirPods Pro. But they borrow a couple features from the AirPods Pro, like noise cancellation, spatial audio, and a mode that lets noise from outside come in. So if you're walking on the street, you can still hear cars passing by and stuff like that. So I can't hear you right now because noise canceling. Now I can hear you because I just turned on transparency mode. So they're really comfortable, but they're a good deal heavier than you would find on Bose or Sony headsets. And that's because they have this steel frame here, which makes them nice and sturdy, but it slides up and down. So Apple borrowed a couple features from its other products. It has a digital crown here, which you might find on the Apple Watch as well. It's just a circular volume control, and you can push it in. And there's also another button which lets you push and move in between noise cancellation and transparency modes where you allow the audio to come in. So the catch is they cost $550, which is a lot. That's about $200 more than you would spend maybe on a pair of Bose or Sony headphones. They're high-end noise canceling headsets. But those are made out of plastic and not metal, and they don't connect as easily with your phone as AirPods do, or the AirPods Max, which really you just open your iPhone, tap connect, and you're good to go, and then you can connect on your iPad or your Mac. So they work really well with Apple's system. So they do borrow a couple features from AirPods, so you can tap to pause or actually lift up the cup. There's sensors in it, so it knows if you lift it up to talk to somebody or remove it from your head. And then there's also double tap to skip songs, triple tap to go back, and other features like that. You can hold the button to speak to Siri or just say, "Hey Siri." So they sound pretty good. Apple includes 2 of its chips in the headphones as opposed to just one, and some headphones don't include any chip on them. So they're kind of like little computers, and those chips automatically set the equalizer. A lot of headphones you go in and manually choose if you're listening to jazz music or classical or hip hop. This does that automatically. It does it 200 times on the fly. I think in some ways they are worth $550 if you're the type of person that really wants a status luxury symbol on your head. They're really good headphones. They sound great, but if you're just perfectly happy with noise canceling over your headphones, you'll like Sony and Bose products. They make really good headphones, and they're $250 or $200 less than these.
Okay, time for today's numbers round. Let's kick it off with 110,000. 110,000 restaurants have closed either permanently or long-term since the pandemic began, according to a report this week published by the National Restaurant Association. That number illustrates just how debilitating the coronavirus has been to the hospitality industry. And unfortunately, it's likely to get worse. This morning, New York Governor Andrew Cuomo announced that all indoor dining in New York City will close starting Monday, citing a rise of COVID-19 hospitalizations and bracing the public for what he called a, quote, bad December and January. Next, 22. Lululemon banked $1.1 billion in sales last quarter. That's a 22% jump from the same quarter in 2019. Now, while apparel sales in general have been soft this year, Lululemon is a bright spot. The retailer has been able to capitalize on the fact that more people are focused on at-home workouts right now, and they're opting for comfortable athleisure wear during remote work. And we'll leave you with $3.5 million. As part of its monster IPO yesterday, Airbnb allocated 3.5 million shares for hosts who rent their homes out on the platform, meaning that for some lucky Airbnb hosts, they got to buy the company shares at the IPO price of $68 and enjoy the cash windfall that came yesterday afternoon when each share started trading at $146. CNBC spoke to one husband and wife hosting team who made more than $15,000 yesterday on that opening pop. Check out that story along with all our IPO coverage by going to CNBC.com and downloading the CNBC app. That's it for After Hours. We'll be back here in our home office every Tuesday, Thursday, and Friday, so be sure to catch us then.